it's not just about the type of business you're in. It's also about how good you are as a business owner and how good you are at running your business.
So you got a profit problem?
Yeah, I mean, a profit problem, I guess, especially with new businesses, they're in that growth stage, and in their heads they're thinking, okay, that was my tax bill. But then they start to take on more retained work, more project work.
Yep.
And all of a sudden their profits are getting up towards 100 grand. But in their head, they're still thinking, well, as long as I've got 8-9 grand to one side, I'll be fine. But now you're talking, well, okay, it's going to be double.
What's your thoughts on the phrase, stick it through the business?
Problem comes from Dave down the pub. The reality is that what you think you're putting through and what your accountant is letting you put through are very different things.
So we've got our ears wide open, minds ready to explore. We're going to dive in. Today we've got Martin Crooke. Crooke, great name for an accountant, on the show. Martin, thank you for coming on. How are you?
No, I'm good, thank you. Thank you very much for having me. Yes, Crooke does come up often. Never get bored of hearing it.
Talking point for clients. So just to get us started, really, tell me about your journey. How did you end up becoming a chartered accountant? Where did it all come from? Because not many people I know, little kids, think, I'm going to be an accountant, you know.
No, and that's the same for me. Like at the age I was, so I started accountancy when I was 19. That's when I went in. But the job before that was, in a way, it was like my dream job at the time. I ran a snooker club, and I grew up in snooker clubs, particularly this one. Loved the game. So when an opportunity came up, the owners approached me and said, "Do you want to come and work?"
Yeah,
it was great, and it was so quiet. I'd spend my day playing snooker. Yeah. When I got bored of that, I'd watch the telly, and then when I got bored of that, I'd go and play snooker again. It was great.
Wow.
But it wasn't. It was boring. There was no customers. It wasn't the nicest atmosphere. So I just sat down one day and thought, what do I want to do? Didn't have a clue. Mm-hmm. So I thought, what don't I want to do? Let's eliminate some stuff. I don't want to really work with people, particularly drunk people. And that kind of left me with, well, what kind of job? Do you sit in an office all day? I've always been fairly good at numbers, and at that point I just kind of, let's give it a go. But it was never any like burning desire to be an accountant. Like some people know they want to be an accountant from, like, say, from school, but I had no idea. It was just something I thought I'd give a go, and then it was only 5 years into it, perhaps, that I thought, let's give it a go. Let's give it a proper go, because up until then you just kind of, going through the motions, just working day to day. Showing up, doing the work, going home. But 5 years in, I think I'd perhaps got a promotion and thought, actually, this could do something with this. Let's make it work. And from that point on, it's kind of the progression just went higher and higher.
That's brilliant, isn't it? Because normally people say, certain people get told you're going to be a doctor, a lawyer, or an accountant. God, that sounds horrendous, doesn't it? Pick the worst of three bad choices, yeah?
Well, it's weird. When I came to that decision and I'd eliminated everything, I thought, right, what do I want to do? Who don't you have to really work with people? And it came down to an accountant or a plumber. I don't know why. I think it was also like, who makes lots of money? Who earns lots of money? I thought, accountant or a plumber? Worlds apart. And then I thought, actually, no, plumbers have to go to people's houses. So scrap that. Accountant, you can stay in your office. You don't have to talk to anyone. You can sit in your office all day long, not speaking to the world. That's why I chose accountancy.
So you've mentioned there, like, a really pertinent point. How much money do we get? And you must know now, with all the different variations of clients you have, who does get paid the most money? What kind of job? Because people want to know.
That is a good question. And I think when it comes, so I deal with people that run their own business, right?
Yeah.
Not people in employment. And I think that's a very important point, because it's not just about the type of business you're in. It's also about how good you are as a business owner and how good you are at running your business, because there are people out there, plumbers, electricians, who should be earning loads, but they're not, because they're not pricing correctly. Then ultimately that's it. They're not taking into account increase in materials, the fact that the subcontract labor's gone up, and they're not pricing their jobs correctly. So a business that should be earning lots of money they're perhaps just earning less than their salary job. Wow. I see that quite a lot. And it's a little bit frustrating. You feel a little bit bad for them, because you do think they're taking on all this stress running a business, and they're earning less than if they were just being in a job. But they don't want to be in a job, because they want to dictate their day.
Absolutely.
And it's a sacrifice. But I guess, I don't know, it's people who have who are like consultants in the service industry. They've obviously worked in a job for a long time, got some experience, and they've gone self-employed to deliver that service. No overheads, no costs. So their daily rate is pretty much all profit. They're the ones that it seems like they've just got it nailed down, like an easy life. You don't really know what they do. How are they earning that much money? Is this just like consultants?
Business
what is that? Yeah. Any like the trades and stuff, they should be earning decent money, but it's just more hassle. There's more things to take into account. You got your cost of materials, your cost of your labour. You've got all the various taxes you have to deal with. If you've got a skill in the service industry that you can deliver, that's perhaps where I'd be focusing.
Okay, super interesting. So, I mean, what does an accountant actually do apart from play golf all day?
Lunches, breakfast.
Yes.
It varies, like day to day. So, for example, this morning I did a set of quarterly management accounts for a client. They're a subsidiary owned by a parent company, so they submit that to Germany, their parent company. I'll sometimes get involved in a bit of bookkeeping, if you're reconciling invoices and stuff. For me personally, what I tend to spend most of my time doing is I'll get my team to prepare monthly management accounts for my clients. Then I'll look at them and help interpret that information for the client. So it'll be a case of saying, okay, you've earned this much this month in your profit. The tax on that is this. Maybe put that to one side. Your VAT quarter's coming up. So far, you're gonna have to pay this. Put that to another side. And also bear in mind at the end of the year, if you keep drawing this much out of your business, you'll have self-assessment tax to pay. Maybe start putting this to one side. So it's more about being a bit proactive and preparing clients for what's going to come. Because the last thing anyone wants is to get to like tax payment day. And you get told what you got to pay, and you've done nothing to prepare.
The classic, where is it?
It is. I mean, business owners, they go from being employed, getting a pay slip where their employer's already taken the tax out, and all of a sudden you get paid gross, and you've got to put the tax to one side, but they never do. They just spend it all because it's in their bank. Spend it, and then you get to your 31st of Jan. You're saying, right, here's your tax. Well, this is what you got to pay. Presumably you've put some aside. I've been telling you every month to put it to one side. And they're like, I spent it. You're like, okay, great. So that's, but then, there's you've got VAT, payroll. My team does payroll. I don't really deal with payroll. I've never done that.
Do you then find, like, that situation you've just explained there, getting to that time in the year, do you then find people just start paying HMRC on account for, like, in arrears basically for last year, and then the same will happen next year, and it just is a constant payment on account of catch up?
It is, and that the first few paydays you get in, when you get that money in your bank and you just think it's yours, even though you know in your head that 20% or 30%, whatever it is, should be put to one side, you'll spend it all, and you'll just think, well, next month I'll earn some and I'll put that'll be towards, and you just think, well, next month, I do have some clients that are very good, and there's actually some apps you can get, like on your mobile banking, where any invoice that comes in, it automatically puts X% to one side. Like, you can set it up. So when your £1,000 come in, it put 300 quid to one side, like, automatically.
Right.
And people that are doing that, it's like, when I say this is what your VAT is, they're like, I've already got it to one side. And that's great.
I think utilising technology in anything you can do is a no-brainer. I mean, I'm using that Metal, so it's like a fintech from NatWest. And you can set up percentages when it comes into the account. So, like, corp tax, 19%. So anything that flows in, you just get stuck into a pot.
I mean, that's perfect. It avoids that nasty surprise at the end of the year. Someone saying to you, right, you've done really well, here's your tax bill. Because generally speaking, if you're setting those percentages, it comes in at more than what you actually have to pay. So then you've got kind of like a little bit left. You can do to an extent, do what you want with. I guess on the flip side, it's just that opportunity cost. Could you have spent that money, invested it in your business to grow? Or, was it best put to one side for the tax, or could it have been invested to earn more to then pay the tax?
This is it, isn't it? I think in any early stage business, it's that constant investment, isn't it? Inevitably, what you make goes back in, doesn't it? And you keep having to kind of build it until you get to that stage where you like to call it a profit problem. Tell me about a profit problem.
A profit problem.
I think that's a brilliant phrase. You got a profit problem?
I mean, a profit problem. I guess, especially with new businesses. They're in that growth stage, and they're perhaps not used to it. They might have had a year one when they made, 40 grand profit, and they paid a bit of tax on that. And in their heads, they're thinking, okay, that was my tax bill. let's put that to one side. But then they start to take on more retained work, more project work.
Yep.
And all of a sudden their profits are getting up towards 100 grand.
Yeah.
But in their head, they're still thinking, well, as long as I've got 8-9 grand to one side, I'll be fine. But now you're talking, well, okay, it's going to be double, potentially double that. So it's a problem because generally a lot of business owners don't realize it's happening.
Yeah.
And it might be the reason might be because they've upped their drawings out of the business.
Yep.
So in their mind, they just look at their business bank account and they're like, well, I haven't got all this money sat there, so I can't have made that much profit. And you're like, well, no, what you've drawn out isn't deductible.
Yeah.
But they think it is for whatever reason. So they think they're not making any money because they've got nothing in their business bank, but they've been drawing it all out for their personal lives and going on holidays and all sorts. So the problem comes when they don't realise they've made the profit, and the trick is to get in there early before it's too late to say, right, this is what your profit is. What can we do?
And is that where the management accounts come in?
Yes.
So you got that step by step. We're here. This is kind of where we're at, just to give you a gauge and yeah.
I think it's so important just to have something set in stone every month as a touch point. And you might think that you know what's going on, you don't need it, but something will happen at some point that will get raised, and that will be when actually no, that was worth it just for that one thing. Because if you're not having that every step of the way, the only time you'll find out what your profit and tax is after the year and when it's too late to do anything about it. And then I'll be saying to the client, right, you made a lot of money, not really that much we can do about that now, but let's stop it happening next year. You can do this, this and this, but there's not a great deal you can do. Whereas, if you catch it right, you could, there's several things you could do to maybe get that profit down.
Hey guys, I just want to take 30 seconds out of our video today to talk to you about today's sponsor. Our sponsor is QB Rooms. They've produced this video for us today. So if you're in need of a podcast, content creation, or music videos, or in fact, videos for anything, you need to get in touch with QB Rooms. The link is down below now. If you click on this link, it will take you to QB Rooms website. Excellent. I mean, you mentioned there about people not really necessarily knowing about deductions and, oh, yeah, surely. I mean, you hear it all the time. Yeah, you've got a business, that's deductible. And you think, I'm not sure it is. What's the most common questions you get asked as an accountant, in regards to deductions or people wanting to get creative with accounting? Give us some questions, some scenarios.
I think for like non-limited companies, so people that have just set up as like self-employed sole traders or what we call them, they seem to think that the money they've drawn out to themselves, they think that's a tax deductible, whereas it's important to know that anything you draw yourself is not. That's drawing, that's after profit.
It's income, right?
I mean, you've got your sales, you've got your expenses. What you draw out doesn't come into the equation, so you'll pay tax on your sales. That's your actual business expenses. What you draw out is after what's left. So they kind of feel like in that scenario, I've made no money because I've got nothing in my business bank. It's because they've spent it all. You actually add that kind of back, and then you'll be taxed on the profit before what you've taken out. But in terms of, I don't know, it feels like floodgates have been let open recently, and people have just been like, can I do this? Can I do that? Holidays comes up a lot. Going on holiday, can I put that through the business? That's a key one.
It's a holiday though, right? Or is there a way that
it's a tricky one. And there are certain industries that kind of get away with the load because of the nature of that industry, that they have to travel for work. So if they do a trip to somewhere, then they could probably get away with it. As being a business expense. If you're booking a family trip to Disneyland, you probably, and then you'll have some people say, oh yeah, there's a conference over in Florida, so I've got to stay in Disneyland with my family. Like, that's just a no. But if you're, a flight for one, going to a place and there's an exhibition there or a conference or something there,
and then you've got a ticket to the exhibition, and
I mean, if it's a 1-day conference and you're there for 2 weeks, again, you're probably going to struggle. But yeah, there are certain, like, I guess it is the industry, like people that have to research, like travel consultants, for example, that have to technically, if they're telling people about all these holidays and the great places to go, then they should really be experienced in that. So is that a business expense? Is it not?
It's research.
Well, they would say it. I'm researching this place, so I can now say to people, go to this restaurant, go down here. It's a really lovely place. Whereas, if you're a plumber,
Yep.
why would you need to go to Dubai? And they'll say research for finding out how people in Dubai do plumbing.
Probably completely different. It's probably a lot more expensive.
I think it has to be, yeah.
Gold pipes.
But there's I guess the classic ones are cars, and people don't really understand how cars work, and that's an area. It's such a complex area. I won't go into that detail, but people get confused about cars and how they should buy cars, and if the company should buy cars, if they should buy cars, and there's a lot of
Where do you think the misconceptions come from?
in terms of what people don't understand.
General kind of, people say, oh, that's deductible, that's this, and you can get a car, or the old phrase, isn't it? What's your thoughts on the phrase, stick it through the business? Because you always hear that, don't you? And you think
the problem comes from Dave down the pub.
Right.
And we've obviously had this
so
joke
it's
about
Dave, always Dave.
Always. It's someone down the pub. I know someone who puts this through. The reality is that what you think you're putting through and what your accountant is letting you put through are very different things. So for example, you'll perhaps know, like, people use Xero, QuickBooks, so they'll see what their profit is, and then they'll have a set of accounts that their accountant gives them, which the profit agrees. Okay, great. And then the accountant will say, and here's your tax on that. And that's kind of where it'll end. But that tax figure is prepared on a calculation behind the scenes, which takes your profit per your accounts, and then there's adjustments in there. So your accountant might have said, I don't like the look of that, I'll disallow that.
Without telling the client.
And it might be the case that the client said, oh, no, I can do that. Mate, tell me I can do that. And you're like, yeah, fine, put it through the accounts. And then behind the scenes, they'll be deducting it and adding it back so that they're paying the correct amount of tax, because their accountant feels that they're, like, in charge of that.
Yeah, so it's more of like a oversight.
Yeah. It's, your accountant, I guess the accountant has a duty of care to be declaring the right amount of tax. So that, I think it is. It's the amount of people that come to me and say, "Oh, my mate does this," and I'm sat there like scratching my head, thinking, "Well, how does that work?" Like, I get what you're saying, but I don't understand how they're doing that. And I do then wonder, are they actually doing it, or do they just think they're doing it because their accountants led them to believe that's what's happening?
This is probably the latter, right?
It must be. Certain things you just think, unless their accountant is just either like just ignorant, they're just turning a blind eye, or like just out and out just fraud.
Because there's so many like qualifications for accountants now. Obviously when I'm submitting mortgage applications, they'll say, the accountant's going to have X, Y, and Z certificate. You're getting people sending you accounts, and you're thinking, well, what qualification is this? Like, where did you do this? So talk to me about the variety of qualifications and how that kind of affects the industry. People thinking they're a chartered accountant, they're qualified, they're not. It's vast, right? Why not just have one? One exam.
Yeah, the main one really in England is ICAEW, which is your ACA, your chartered. I guess worldwide, ACCA is pretty big. So that's your chartered certified accountant. You've got also CIMA is relatively big. That's a Chartered Institute of Management Accountants. They're like your three main. Below that, you've got your AAT. So I did AAT before I went on to further qualification.
Before you became a proper accountant.
You said that. But I think, but you don't have to have anything. You don't have to have anything to be an accountant. There's certain things you obviously can't do if you've got no qualification, but you don't have to have any qualification to call yourself an accountant. And that's where I get frustrated, because there are people out there. It tends to be what happens is someone will go back to work after taking a break. They'll go back into it, doing some bookkeeping. They'll then see that the accountant is charging a lot more money, and they'll say, "Oh, I could do that myself." And charge you less, and then the client will be like, "Oh, I'll save some money here." If it's just a case of pressing some buttons, then they'll move over to the bookkeeper, who's now calling themselves an accountant, and they're not getting any of the advice. Now, the bookkeeper can look up your basic stuff, and they'll tend to know, oh, let's use your personal allowance by putting a salary through the company, and we'll top up with dividends, we'll put some mileage through, use of home, and it's all basic stuff.
Yeah. Stuff you find out yourself.
Yeah, you just research it. Everyone knows it. Your clients probably know it as well.
Yeah.
But it's the next level advice. It's like the tax planning, the IHT, the thoughts around inheritance tax. If you're at that situation in your life.
Yeah.
But the advice about how you can do this, what you can do, and I just think it has been a bit dumbed down, and software makes it so easy that anyone thinks that they can do it.
This is it, isn't it? I mean, what's your thoughts on software? I mean, you get like Free Agent, Xero, QuickBooks. What's your thoughts on it? Is it any good? I mean, is it just, does it cause more problems when people are doing DIY themselves?
I love it. Software is great, but it's like a game. Sometimes people think it's a computer game. Like you'll get your receipt on there, and your bank transaction will come through, and it'll go on zero. It'll go green. It'll say match, and you just press OK.
Yeah.
But you can get into the habit of like just if it's okay, just bang, oh yeah, fully reconciled. Everything is great.
Yeah.
But actually, depending on what you put in the system, it might match because the amounts are correct. But actually, if you're invoicing customers and it's like every customer is £1,000, and someone pays you £1,000, if you're not going in and checking which £1,000 do I need to match this against,
right,
and you're just going like, oh, we found £1,000 in there, okay, bang,
right, yeah,
then you don't know who really owes you money, who doesn't. So it does take it makes it too easy, especially with like relying on software to be claiming your VAT and things like that. It's great if you know what you're doing, but it doesn't mean that anyone can do it.
This is it, and it's always kind of worried me, like thinking about, so you don't know what you don't know.
Yeah.
You're not an accountant, so
yeah, I know.
How could someone, Dave, plumber, how does he know he's doing it right? You don't, do you? My view is you don't. Like you don't know, and
you just assume because the software does it. It's got to be right because the software's doing it.
And is that where you add value for your clients? Is that by you're utilizing your knowledge and experience? I mean, talk to me about how you add value to the clients as compared to a software.
Yeah. Okay. So I mean, to some extent, what is value is perceived as the opposite. So, for example, if a client is claiming VAT on absolutely everything, and they shouldn't be, and I'm picking it up and saying, you shouldn't be claiming VAT on your salary, on your someone like paying their HMRC debt. No VAT on it, but so I've seen some clients just get 20% bang because where the default setting in Xero is 20% VAT. So if you code it to that, like if you allocate an expense to a certain category, it will automatically try and claim VAT. And if you're not aware, so part of it is you can't claim VAT on that. If there was an investigation, which I'm seeing more and more of,
investigations,
more VAT inquiries, and if that gets picked up, then you're gonna have an issue. So
right,
it's that human touch, someone looking at something, does that make sense? But yeah, I guess on the biggest perspective, the value on the day-to-day stuff is spotting things and suggesting different ways of doing it. Like, okay, you can't claim that, for example, as business expense, but maybe if you did it like this, you could perhaps get away with it.
And that's what clients want, right? They want good value, something that they're not going to be able to do themselves. So that, to me, it makes complete sense that you would have someone overseeing things. Now, something I really want to know is, without mentioning any names, tell me the most shocking thing you've heard from a client or prospect when you thought, "Ooh."
I think the only time I've ever really not wanted to take on a client was a guy came to see me. We sat down, and he didn't have a problem with his current accountant. In fact, he'd got a quote from someone. He was like, and it's one of those things. I've got a quote for this much, basically saying this is how much you got to match. Whether he did or not, I don't know. But it was things that he was saying to me, like, at the end of the year, I just want to, I don't want to pay any tax. I want to make the tax go away.
Zero tax.
Yeah. It's just like, you do your thing, and then I don't have to pay any tax. I'm like, well, if you're making profit, and everything he was saying just didn't sit well. It felt like if I'd have gone into that engagement, I'd have been always like at his mercy,
right?
Doing things I didn't feel comfortable doing, or signing off things I didn't feel comfortable. if you're suggesting things to someone like, if you did something like this, that's different because it's coming from me and it's a suggestion. But if someone's trying to put that on me and make me do stuff, then I don't want.
You're being a tax bitch, basically.
that is it. Yeah. Like sometimes you see these films, like these gangster films, where the accountant's just like he's just the bitch in the system. Everyone's making him do stuff. I don't.
You don't want to be that guy.
I don't want to be that guy. Like I want to be super helpful, super valuable. But in those kind of situations, those films, they're not. They're just like, you do that, I told you to do that.
Scapegoat.
Go make it work. Yeah,
Yes.
I don't. And so that as a prospect made me feel really uncomfortable.
Yeah.
But it's just things that people.
What industry was it in?
It was like high end car hire, like almost they've got some crazy leases on like Lamborghinis and stuff.
Oh wow!
And then they were going to hire it out like for, I guess, decent money. But like I just kind of like, I didn't ignore. I just said like, you're better off going to the other guy you spoke to.
Specialist in cars.
Out. Yeah, I think I replied saying I actually haven't got availability anymore.
Yeah.
So maybe go back to the other person because I just.
But that's the motor trade all over, though, right?
I mean, you say motor trade, but there's so many trades that you just like.
Even the simpler act of going to buy a used car, I mean, that's fraught with potential issues, isn't it? And like, is it, is the engine going to fall out of it? Is it, what's actually happening? Because you don't know, do you? It's not really regulated.
No, I know.
That's super funny. You mentioned it was the car. I thought you were going to say construction, but
no, I mean, I've got so many examples of construction, like smaller ones, but that was just one that's. Like jumps out as being like, I don't want anything to do with this guy.
Yeah.
He'd be leading the discussion all the time. I'm happy to help people, but I don't want people to tell me how I'm going to help them.
You don't want to be that tax bitch. No way. So, sole traders, limited company directors, we speak quite a lot, don't we, about them preparing for their mortgage applications. And it is absolutely critical to get good advice from the accountant before doing so. I mean, what kind of conversations do you typically have with people around that?
I think the key thing with this is you need to be speaking to your accountant as soon as you think you're going to want to buy a house or remortgage.
Yeah.
What I tend to see is people say, I'm going for a mortgage. Can you fill in this application, or can you speak to a mortgage advisor? And by then it's almost too late. It might be absolutely fine because the guy got enough income. But what tends to happen is your accountant will try and make you as tax efficient as possible.
Yep.
Which tends to mean like not overdoing it on the income side. So you might be using the lower rates of tax, or you might just be keeping it as little tax as possible.
Yeah.
And then someone comes along and says, I want a mortgage, and they're a mortgage advisor like yourself, and like the discussions we've been having recently says, I want an average of £55,000 a year because this is what they need for their mortgage.
Yeah.
And then at that point you're like, well, last year's tax return's got 20 grand on. Yeah. So that means that this year needs to have 80 grand on to get 90,
the average.
To get the average up.
Yeah.
And at that point, it's just crazy tax. So, ideally, you want to be speaking to your accountant straight away so that they can start planning, okay, well, if you're going to be 2-3 years' time remortgaging, let's make sure your salary and your dividends, and reflect what you want to be able to get a mortgage on.
Absolutely. And I think that's why it's key, isn't it, for accountants to work with the mortgage brokers to kind of get that conversation going as early as possible and say, look, how much loan do you want to borrow? Does your income fit, or what do you need to, how do you make more profit to get your income to fit? And you often find clients seem to want it both ways, don't they? Do you get that as well? They want to really as low tax as I can, but I want a huge mortgage. I want 500 grand mortgage. Well, you've got to pay the tax on it.
So I had a chat with a guy recently who wanted a mortgage. I don't know what it was after, but he'd been told he needed income of about 50 odd grand averaging. Yep. He'd got 12, 13 probably. Like last year and so far this year. And it's like, if you're not even making the profit.
Yeah.
I mean, if you're making the profit to do it, great. We'll do a big dividend and you'll pay loads of tax.
Yeah.
But you've got to pay the tax to get the income to get your mortgage.
Got to have the hit.
Sometimes it's just the profit's not there, and they want this mortgage, but there's no profit to take any more dividends. So you're kind of stuck. If there's profit there, we can do something, but it does mean tax. And I think it's that trade-off. Like, they want the house, but I don't want to have to pay tax. Like it's almost like you're paying a bigger deposit. Almost, it's tough. It is a tough trade-off.
This is it. But like I always say to clients, look, you know, if you want the house, you got to pay the tax.
Yeah.
That's how it is. I mean,
Yeah.
you know, you can't sit there and pay no tax and then get a huge mortgage. I mean, what are we basing this on? You know, it's got to be based on fact. And yeah, I mean, it's the most common question, isn't it, that we probably discuss. A lot more mortgage applications now I'm seeing are submitted through limited company SPVs. What are the key benefits of utilising this limited company SPV strategy for landlords?
Yeah, so a landlord's got several properties.
Yep.
If he owns them in his own name.
Yep.
Like ordinarily, he's going to have earned lots of money to get him to the point where he can buy these properties, and he's probably still going to have that income coming in.
Yep.
So this rental income tends to be taxed at 40-45%.
Yeah.
Also, recently, HMRC put the restriction on interest relief on your mortgage interest.
Yeah.
They only cap it at 20%. So if you're paying tax at 40%, you don't get the full 40% relief. It's capped at 20%. So by putting your properties into a limited company, I know the tax rates have recently changed, but it's 19% up to 50,000.
Yep.
Which is obviously a lot less than 40-45%.
Considerably,
Considerably. Yes, they might have to pay some more tax, dividend tax, if they want it out, but it tends to be that they don't need that money. They've got the income from their salary or their other business, which they live off, and this is kind of almost like a pension. They're happy to let it sit in that company and build up. So if you don't want any more out of it, then you just pay the 19% tax or 25 or the marginal rate in between. And then you can just let it sit there. And what I'm also seeing people do is actually use it as like a planning for the future. As they've got children growing up, bring them into the company. It's a way to kind of pass your wealth down the line, avoiding inheritance tax.
Absolutely. And then what you do inevitably see with these clients as well is they want to buy more properties.
Yeah.
And then you've got funds in that limited company to then put down towards deposits and things like that, haven't you? And I mean, I'm pretty much doing them on every application when it's buy-to-let or investment properties.
Yeah.
In terms of someone that wants to go and, you know, get advice and to set up that structure, I mean, how do they go about doing that? What would be a good first step?
The problem comes when someone has 1, 2, 3 properties, and they've heard that it can be more efficient if that was in a limited company.
Yeah.
So then they want to go through the motions to do that. The problem is that to get your property from yourself into a limited company is a sale. So for CGT purposes, capital gains tax is due. Even though no money's changing hands, you're selling it from yourself to a separate legal entity, which is your company. So capital gains tax is due. Also stamp duty, because you're transferring it from your own name to a company. Stamp duty. So it can become very costly as an initial. So what tends to happen is you'll perhaps suggest, right, the properties you've already got, keep them in your own name. Let's set up a new limited company, and then we will, any new properties we'll bring into the limited company from the get-go. There are ways around the capital gains tax and the stamp duty. It tends to be if you are arguing that your investment business is not investment at all, it is a business. So if you can argue that you spend X amount of hours per week, you go to the properties, you're, I don't know, cutting the grass, doing little repairs, collecting the rents, finding new tenants. If you can argue that you can spend X amount of hours per week on that business, then HMRC might accept that it is a business. Now, it tends to be that you need a fair few properties to be arguing this. If you've got one property, there's no way you can argue you spend 20 hours a week on it.
Is it Ramsey's law or something like that? Is it?
What, the case law? I think there is a case v. Ramsey.
That's it.
Where it talks about
where it's the argument for running it as a business expense, isn't it?
Yes, and we've seen cases which have gone through court, so we kind of have an idea of how many properties you need, but it's not as simple as that. It's not as clear cut as saying it's X amount of properties.
Never is it?
No, it's not. It is what you're arguing that the time you put into it. But if you can argue that it is a business and HMRC accept that, then you can qualify it for incorporation relief, which basically means there's no capital gains tax to pay.
Right.
So you just roll your investment into shares in the new company. There's no capital gains tax. You still have to deal with the stamp duty. But then there's another step to potentially get around that. That I'll save something.
Save something back for another day.
Yeah, I'll save that. But there is a way you can potentially avoid stamp duty as well. But it's all how it's structured.
Okay, no, that's super interesting, and this is all stuff people want to know because it's not readily available out there. People try and do a lot of property courses to try and charge thousands of pounds, and then give this information out. But really, you could just go to an accountant. So they're going to be a specialist. It makes more sense.
Yeah.
When it comes to accounting, what kind of key things should prospects think about before engaging an accountancy firm?
Look, so they've perhaps met with a few. I would say the key thing is to make sure you find an accountant that you get on with.
Yeah.
And I talk about this all the time. I might not be everyone's cup of tea, but at least make sure that you feel comfortable to pick up the phone and have a conversation. Where I see the businesses aren't making the most out of their accountant is they just don't speak to them all year.
Yeah.
And they might, and you have a conversation, they're like, oh no, I hear from them once a year, they tell me what my tax is, and that's it. If you don't even feel comfortable to say, I'm thinking about buying a van, what's the best way to do it? Something as simple as that, or can I get this for a business, and what can we do? If you don't feel comfortable talking to your accountant, then you need a new one.
Yeah.
Because you're not getting any value out of it. And you might say, well, yeah, but they're really good at what they do. Do you know that?
Are they?
Yeah, exactly. Like, what conversations are you having that like solidifies the fact that they know what they're doing? So I would just say find someone that you get on with. Obviously, ideally, they know what they're doing as well.
Yeah, it's
not just a really great guy who hasn't got a clue.
But this is where qualifications come into the mix as well, isn't it? Surely you've got to be a certain standard to have kind of been working on some higher things. I mean, if someone goes, I've just got a bit of bookkeeping, I'm like, you're going to be good on IHT?
Yeah, I think, but then qualifications don't necessarily mean that person has had experience working in real life.
Yeah.
They might have gone out and got the qualification, but all their clients are like one-man bands, sole traders that have never had to. I mean, I'm fortunate that I'm part of a practice that's been going forever. Yeah. We've got all sorts of clients, all shapes and sizes, doing all sorts of different things. So I've been able to experience loads of stuff, more than perhaps what some of other accountants I know my age would have done.
What do you think is your key drivers for success? I mean, I've known you a little while now. You've progressed from the snooker club, gone through your qualifications, worked in the accountancy industry for a number of years. I think you know what you're talking about. No, you do. You do. What's your driver for success? I mean, what gives you that kind of motivation that other accountants or other people might not necessarily have? What makes you tick? What's your why?
I've got kids. So the easy answer would be to say them. Sure. And I don't consciously think I need to work hard for the kids. Yeah. But something interesting happened. I don't really believe in luck or fate. I think you create your own. Yeah. But 8 years, I shouldn't have my kids' age, 8 years ago, when we found out we were having our first child. Yeah. For some reason, that we found out that was happening, and we were like, I was on a salary, wife wasn't working. Yeah. No, she was on a low salary, but she was going to have to potentially stop working. Yeah. Yeah. All of a sudden, I got a promotion a month or two later. 3 months later, I got another promotion. 9 months after that, I got another promotion. Yeah. Now, I don't know if it was that something changed in me when I realised I was going to be a dad to make me work slightly differently to allow put myself in that position. Yeah. So whether subconsciously the kids are the driver, but I mean consciously. I love interacting with people. I love helping people. I love the feeling that you've added value to someone's business and you've kind of helped them in a way. I think if I could get to a point where all my clients are like, I see them all as friends, and then when they ring me, you're like, oh mate, how you doing? Not
absolutely.
Hello. If I can get to that point when my kind of work life is basically social life, and that's kind of where I want to get to. It doesn't feel like work. It's just.
Well, I think you're doing a really good job with that, with like the lunches and things like that. It definitely feels like that. I mean, what's your ultimate aim for like the next 10 years? What would you see yourself doing? I mean, I know you're working at a firm at the moment. You're a partner at a firm. What's your goal beyond that?
I mean, Kilby Fox, the partners there, one's about to step away fully. Another one's, potentially going to be looking in the next 5-10 years or so. Yeah. So it will get to a point where the remaining partners will kind of be there sharing what's what. So I'm absolutely going to stay where I am. I think in terms of my work life, I'd really love to get to the point when I've got like really great people doing all the day to day.
Yeah.
And my life is just having chats,
Yep.
playing golf,
Yeah.
having breakfast,
Playing golf.
and I'm not really doing any proper work.
Yeah,
like
yeah.
I'll get fed information, I'll grab it, let's have a meeting, grab some
Decision
lunch,
making.
let's talk about the stuff.
Yeah.
And it's that high end like strategy, talking about what we can do to save tax, what your next steps are, how we can help you get there,
Yeah.
what you need to be doing to make it get there faster. If my life could just be meetings and golf,
Yeah.
that'd be perfect.
But that's the epitome of the ultimate professional services life, isn't it?
Yeah.
Getting to that stage. So no, that's amazing to hear. I mean, in your opinion, what do you think makes a really good accountant?
Very good question again. I think someone who thinks outside the box, challenges, it sounds a bit cliche, but challenges like the status quo.
Yeah.
Just because someone else has said something,
Yeah.
doesn't necessarily mean that that's correct in every scenario.
Yeah.
But just, someone who's prepared to listen to something and have an open mind.
Yeah.
Too many accountants are very closed-minded. They won't do it because that's just how it's never been done like that.
Yeah,
so we'll
yeah,
just, I don't want to rock the boat. Or 12 years ago, 20 years ago, you can do something. So that's how it's always going to be. Like,
Yeah.
you got to be keeping on top of not only like legislation and tax rules, but like using software and things like that. But I think that open-mindedness and thinking outside the box is what, whenever someone said to me, my accountant's not very good, I used to have one really good, he used to do this, that, and the other, and it's like, yes, that's what accountants should be.
Yeah.
You've
Why are you
just
not
had
with
a-
them?
Yeah.
Why did you move?
Yeah. And it's that scenario that their bookkeeper said they could do it cheaper. So
Sure.
they moved from a good accountant to a cheap one, and they've probably paid the price by
In value.
Yeah.
Yeah.
And then they won't get back to the where it was before. And when they're telling me what their old accountant used to do, you're like, yeah, that's it. That's having that like proactive thought.
You know what? Like you've touched on there, and we mentioned it a bit off camera before we started, is about just because it's always been done a certain way doesn't mean it has to continue like that. And you know, I mentioned the fact that when I was employed, I had a manager and he used to just say Jurassic Park, and that is basically what it implies, you know, and it's challenging the norms. So it's super refreshing to hear you talking about that. Just before we go, how can listeners, any potential clients, how can they learn more about you? Where can they find you on the socials and things like that?
I mean, I'm off and on LinkedIn. I love it, and I'm on it all the time.
Yeah.
And then I'll just get bored of people, and I'll come off it. But my goal is to get more on LinkedIn.
Yeah.
I've got a bunch of videos done. I'm going to try and
We'd
edit
love
them,
to see those.
roll them out. Just get a bit more focused on that, bringing in some humor and some funny stuff into it. There's not a great deal on the website. Don't worry about that. But yeah, my personal LinkedIn is kind of that's me. That's my humor and my personality in that.
Brilliant. And that's what makes you such a pleasure to deal with. So thank you for coming on today, Martin.
Thanks
I really
me.
appreciate it. The Crooke accountant. I love that. Thanks, mate. Thank you. Hey guys, hope you're enjoying the Alpha Chats podcast series. We really appreciate you watching. If you're enjoying, please subscribe. We're trying to get up to 1,000 subscribers by the end of this year, which means that the more subscribers we get, the bigger reach we have, the bigger, the better guests that we can get on. Thanks, guys.